Welcome back into the podcast. Today, we're going to be diving into what's happening in the ETF space, but also we'll dive in a little deeper on where Franklin Templeton is going in their Benji project. So we'll get a chance to visit Roger Bayston from Franklin Templeton, who will be joining us here shortly. Before we get into all of that, one of the things that I want you guys to be aware of is there is a changing of the guard. We're already starting to see an unbelievable amount of conversations coming out of Davos that, of course, 2 years ago, even last year, would not even have been at this world stage. This, of course, has started to change. And it really boils down to who is holding the keys. And what I mean by that, when you look at the pressure and the consistency that we have seen coming out of the market here in reference to the Clarity Act, today's episode will get into all of that because it really is going to be a revolution versus an evolution in finance. And I think that's why you guys need to listen to today's episode or watch if you guys are in. We'll jump over to a few leading news stories that I want to kind of hit on. Many of you guys always ask, well, where is XRP heading? That's typically the show copy that we get into often here. And I want to kind of start off with a few things on Ripple news. And one of the big issues that I think is facing everybody right now in the market is, are we in a bear market? And I think as you see, not only Bitcoin, Ethereum, Solana, and XRP, the big four, really making their moves. One thing I want you to be aware of right here, when you look at just the amount of opportunity that's happening, I'll just highlight this right here. Ripple, this was, of course, Brad Garlinghouse's theme at Davos. Ripple is laying out a transition in which XRP is no longer positioned primarily as a traded asset, but as an infrastructure supporting tokenized finance and institutional settlement. Now, we've known that for some time. The key here, though, I believe, is that Garlinghouse and Ripple have started to set the tone in the global stage. I think now with Davos and the fact that we've seen blockchain, RWAs, and also crypto in general, let's at least not what we're going to be talking about around stablecoins, all of this is pointing into one direction, and that is that XRP's tokenization shifts, really from a theory, and I agree with this headline, from a theory to balance sheet reality. And this is a big factor because it will have, I think, more imposing issues that Ripple will face, whether they go IPO or if we continue to see pressure on the token. And when you think about pressure on the token, well, one of the things you have to worry about right now is sentiment overall. Sentiment in the crypto market is at one of its lowest points in general. But when you look at CoinMarketCap's sentiment tracker, it doesn't look that low. And there's a lot of reasons why this, but I think a lot of people are still a little bit concerned about the instability of what we're seeing on a global macro stage. One thing that Zach Rector hit on right here is that extreme fear is historically a buy signal. And of course, Rector talked about this before. Sentiment from what we're seeing in blockchain right now, very low. But the key here is, are you getting a chance to purchase some of these assets, maybe at prices we may not see again? Not financial advice. The point is when you're looking at digital assets in general, it's always highs and lows. And if you look at where we are currently just in the market, we'll take a quick look at XRP. We are doing and using our MSI indicator, which basically is a sentiment indicator. And as I look at XRP, this is one of the lowest sentiment scores that we have seen in a while. And when you think about that, of where we are right now on sentiment, let me see if I can zoom in on that for you guys. Right there, you can kind of see where we are setting at 25 on trade MSI. And then, of course, volume sentiment holding it around 28. This is one of the lowest areas that we have seen on XRP in some time when you look at the overall market of it. And, of course, it's holding around 192 right now. I think the other factor that you've got to look at in terms of XRP, how is it performing against Bitcoin? Bitcoin, of course, has been holding flat a little bit. Now, I think a lot of what we're seeing right now in the market is preparation for one of the things we've been talking about a lot, and that, of course, is the Clarity Bill. And when you look at the market structure focus and the pressure and the pushback that we started to see coming in from the market just over the past 10 days, it has started to, I think, create a little bit of sideways action. Many people ask, is that priced in? Well, hopefully today in our conversation with Franklin Templeton, we'll learn a little bit more about it. So I want to bring in, of course, our guest today, and I'll stop sharing that and get in. Roger, how are you?
I'm great. Thank you. Thanks for having Franklin Templeton and let us share our insights with you today.
I love it. Now, we've had Sandy on before. This is, I think, your first time on the show, so welcome in. Thanks for coming in today. I want to learn a little bit more about, obviously, you've been in the finance, TradFi business for a long time. I looked at your bio on the FT website, and it was like 36 years. Is that right? Yeah, 36 years in the finance.
I started at Franklin in 1991. So yeah, not only have I been in the business for a long period of time, but I've actually been at one organization or institution for a long time. That's pretty unusual.
Yeah. Well, one organization on Wall Street is definitely unusual. You've had a chance to see an evolution of not only financial services, but also the makeup of the modern day investor. And when you look at what's going on right now, everything that's happening, what we're seeing in terms of just the activity coming out of DC around some of these bills passing the Genius Act last year, stablecoins becoming a major wave in terms of finance movement. I'm kind of curious, do you think that this is a natural evolution to a market, or has crypto just dropped a bomb in the middle of Wall Street and they're responding to it?
Well, Wall Street is definitely responding. I mean, Wall Street was iced out of responding until, earlier in 2025, when, quite frankly, that policy that the SEC had of encouraging people to follow their SAB 121 accounting treatment, that was effectively a freeze ray over most of US-based institutions to be trying to figure out how to use blockchain in their business models, because it was basically saying if you have a customer in your organization that has, assets in this environment, you need to hold $1 of capital against every dollar that customer experience. Well, that's not a scalable business. When that got swept away, for sure, Wall Street had a whole bunch of skunk work activity going on over the past couple of years, looking at this potential outcome. And what they've identified is that this underlying technology, these blockchain technologies, distributed ledger technologies, Wall Street asset management is filled full of ledgers. So if we can clean up the friction between these ledgers and minimize the transaction costs, we're going to end up with a much better infrastructure. And that's, I think, what exactly is going to be unfolding in front of us in the next couple of years.
Well, I was looking at your CEO, Jenny Johnson. She was at Davos. I'll play a clip for you guys. Let me bring it up on screen here. One thing about this that I thought was interesting, because she talks about Benji, which we'll get into here in a second. But one thing that I think is interesting to me is the fact that we are seeing.
So we began our journey in blockchain in 2018. Today, we are the only firm running a tokenized money market fund that's natively on the public blockchain.
Okay.
Others are digital twins, meaning they're shadowed on the blockchain. And so that enables us to do some really interesting things. One is we pay out interest every day.
Okay.
We calculate interest every second. Impossible to do in the old kind of rails of the system. If you own our money market fund for 4 hours, 32 minutes, and 22 seconds, you'll get paid for that time. So intraday payments. The cost of it's dramatically less expensive because there's not the reconciliation, all these other things you have to do in the way the old system runs. And so our traditional money market fund, to open an account, you have to start with $500. On our blockchain money market fund, we made the limit $20. Huh. So you can have a lot more people can start, from a financial inclusion, are going to be able to leverage these technologies.
All right, so a couple of points to get at there when you listen to what Jenny was talking about. The key here right now, of course, we've been watching money market funds grow. I think it's at its highest ever, over $7 trillion right now in terms of money market growth over the past really 5 years since we've seen higher interest rates. I'm kind of curious, when you look at the Clarity Act and the banks pushing back saying that there is flight of capital, aren't we seeing flight of capital right now into money markets? Because it seems like we are seeing massive growth here.
Well, I think money markets have stood, test of time across multiple, have been cured across multiple credit cycles, economic cycles in the U.S. over the past several decades, including the global financial crisis.
Right.
And as a result, I think they've really become a brand of trust as part of either individuals or institutionals kind of liquidity stack.
Yeah.
bank accounts, money market funds. Money market funds have this, feature set of being fully collateralized. And in this proliferation of blockchain rails, which the biggest killer app in all of blockchain has been stablecoins, by and large, the idea that money funds still at this point offer this advantage of providing income and yield to their users continues to anchor them into the financial system, fully collateralized, provide the yield. Those are differentiating factors versus what's happening either banking deposits or in stablecoins themselves.
Right.
And so I think it's really about what unfolds in the next years and how all of these things interact across one another. I think this new utilities that we've been able to unlock with Benji, and I'll have to remind my friend Jenny to, when we talk about tokenized money funds, keep saying Benji, Benji, Benji.
Yeah.
But this idea that we have been able to use the blockchain and create more utility on top of what is already a $7 trillion marketplace probably means that that $7 trillion marketplace actually has an opportunity to grow toward even more uses. That's kind of, I've been in asset management, really since the mid 1980s. I've never seen a time where there's more exciting change and opportunity coming forward, not just for those who provide advice, but actually for the underlying consumers of those advice. There's massive numbers of new types of assets that clients can put into their portfolios as a result of this blockchain technology unlock.
What do you think the market is, when you think about just the TAM in general and what might be reality for money market growth, but more important, maybe ETFs, in terms of the activity coming in from traditional investor? Where is this going to look like?
Let me stay on the money market funds specifically. I mean, ETF is a wrapper around a number of different advice, different type of advice. Money funds are very poised and focused on the short part of the curve. We started our project in money funds specifically because we had enough insight to know that money funds have been in the transactional economy for a long period of time. Paul, when's the last time you wrote a check?
Not much.
Right, but money market funds have had check writing capabilities for decades now, and debit card capabilities on top of them, more recently. So this idea that people have been using money funds to pay for things, goods and services already, has already been embedded behavior. Now that you can, literally transfer Benji from you to I instantaneously, and as Jenny was pointing out, whatever amount of day that you hold it, you earn the interest. This unlocks money funds to be able to have far more utility in the collateral management process for Wall Street. And so while currently, we've been really active in talking to Benji and about Benji with crypto native hedge funds who are comfortable inside of the digital wallet ecosystems that are proliferating. And if they can use Benji to substitute or complement whatever they're doing in stablecoins as collateral for their complex trades, then the economics of that trade work out better. And, crypto is a super interesting marketplace, but, the TradFi public markets are, 35 times the crypto market. And so application for collateral management and tokenized money funds for the TradFi space actually means that $7 trillion could easily double if you start using tokenized money funds as collateral. There's other use cases that we keep exploring as well, but that just gives you an idea about how much more useful the money funds can be riding on these more efficient and higher utility blockchains.
Well, and the point behind this, you guys being on an open blockchain as opposed to the closed blockchains that we've seen most of Wall Street kind of focus in on, this kind of changes, I think, the narrative in general for Franklin Templeton, because you guys have been one of the more edgier TradFi companies that have moved, I would say, into the space of where blockchain is heading, at least on a stasis of where the financial rails are going. When you look at that and you think about just in general, RWAs, real world asset, we've seen massive growth also on the Ethereum blockchain, one of the biggest out there. Of course, we're going to continue to see this when tokenized stocks become a reality outside of just being traded on X stocks or moved over in Europe through Robinhood. What do you think that is going to look like in, say, 12 months? Once we get some sort of clarity act through or some sort of legislation?
Well, look, 12 months, the development time on getting these things implemented in place are very complex. It always starts, quite frankly, in the financial system of who's going to hold the assets.
Yeah.
Right. And this is one of the things that has rapidly developed in 2025 and will continue to spill forward is custody. Who custodies assets? Are they capable of custodying what we call digital asset securities or, crypto in general? This is the world's monies are held in safety and confidence at a handful of massive global custodial banks who will need to rapidly grow their services in these blockchain-enabled custody of assets for their clients. And that is happening, but it kind of starts there. But I mean, literally the underlying piping is, as you pointed out, is changing pretty rapidly. We fully expect that we will meet customers. So, when I say customers, fund shareholders, users of Franklin Templeton's great global investment advice, we expect to meet customers in a Web 3.0 digital wallet in the future. We know that these digital wallets are proliferating faster than the internet proliferated 30 years ago.
Yep.
So we're going to meet the clients there. And we also know that the content off of which we make advice, and when I say content, I'm talking about things like US Treasuries, NASDAQ, NYSE, all of those have announced plans to be able to issue their securities in native blockchain form.
Yep.
And so we're going to meet clients there. We're going to consume the raw materials off of which we make advice in blockchain form. All of this is rapidly, changing the underpinnings of Wall Street. There's going to be actors who are serving intermediary roles in reconciling these record systems back and forth and earn money for doing that. Those are going to be threatened. There's going to be disruption. One of the things that we really like about, the team at Ripple and why we have, elected to have XRPZ, our Ripple ETF at Franklin Templeton, is because we see how much capital these blockchains have aggregated, how much intellectual capital they are aggregating as a result of the capital that they have accumulated over this run over the past 10 years, and how they are dedicated to helping rebuild the system and create more efficiencies. We think that's all really good. I think you're going to look back, I don't know about 12 months from now, but you're going to look back 5 years from now, and you're going to be seeing this massive change in opportunities. We're excited to be part of it and to kind of meet the challenges that are coming forward.
How do you meet? Okay, so when you look at the current landscape, there appears to be a battle line being drawn. And I think it started really last year and the year before. And it was really centered around debanking. I'll get to a clip here by Eric Trump. He talks about this, and I want to ask you a question after this. Let me play this clip here.
I mean, the big banks have been an absolute monopoly over our financial system for years. You and I have joked about it 1,000 times. Why can't you send a wire transfer past 5 o'clock on a Friday afternoon? You know why? Because the big banks would love to take hundreds of billions of dollars and have it sit there and clip interest off of it over the course of a long weekend, as opposed to letting you just efficiently move that money using modern day technology, and have it in a separate wallet 2 seconds later. They want to be able to use their money. They want to be able to arbitrage their money. And so, the big banks are doing everything they can to stop some of the crypto legislation for obvious reasons. Why?
All right. So the point that Trump is getting at there is this has been a gatekeeper, economy for a very long time when it comes to financial services. How do you think that the big banks can overcome this narrative that's out there right now? Because this is running rampant in social, in most of the crypto community, and also I even think to a certain extent in some other extended communities that are out there that are basically educating people on all sorts of assets, whether you're thinking gold, silver, ETFs, crypto, blockchain, meme coins, you name it. This narrative translates in all of them. So how did the big banks overcome this?
Well, I think the banks are going to keep evolving. I think, banks, like JP Morgan are a brand of trust. And, I think if you were to ask yourself, what are the odds of, 25 years from now, we still know the brand of JP Morgan, or do we know the brand of Solana?
Yeah.
There'd be a whole bunch of people would be saying, well, I think JP Morgan is going to be there. They constantly going to have to evolve. And quite frankly, this is one of the things I think that has been the beneficiary, again, of the repeal of SAB 121 and the encouragement by a number of different regulators, whether you're in the securities regulators or whether you're banking regulators, to improve the outcomes for customers and clients by integrating this technology and being a world leader in doing so. Banks have got tons of, we talk in interface, through our senior leadership with banks all over the planet and what are their plans for using blockchain technology. And they have tokenized deposits. They have a number of different rails that they're talking about to improve. There's no doubt that the movement of money across planet Earth is fairly archaic, but it's rapidly evolving and changing, as Mr. Trump was pointing out there. And that is ultimately going to be benefiting the shareholders and customers and clients.
Yeah.
I mean, as Jenny pointed out in her video there that you showed, we have been able to reduce the account minimums by using these technologies to be more inclusive, less exclusive. The entire, alternative investing, private investing space, which has been, the exclusive purview, just those that have money, is likely going to be cracked open so that, smaller investors can benefit from the diversification and the extra alpha by being able to be involved in these marketplaces. All of these things are unfolding rapidly right in front of us. And it's true, banks are going to have to find other ways to compete because there's plenty of things that they're going to be doing in an intermediate role currently that might be disintermediated away. The last thing I would say that's beneficial to the banking system that we are seeing is that this blockchain technology purports and holds promise to dramatically improve the collateral management process.
Right.
We spoke about how Benji is being used in collateral for financial transactions, but a basic business of a bank is to say, hey, here's an asset you have. I'm going to lend against it. You got to watch what that asset is doing. If that asset is a plane, is it taking off and flying somewhere else on planet Earth? Where is it? But this idea that, blockchains are a source of truth and real record, this isn't a big improvement over the existing collateral management process. And it's likely what we're going to see is banks are going to be able to begin to create far more efficiencies and, quite frankly, might be able to lend more because they're integrating these technologies. So it's not really about minimizing their opportunities going forward. It is about how do they create more efficiencies for themselves? How do they use these technologies to do more of what they're in the business of doing, lending? They might get more in the business of being an originator and servicing and offloading assets that they have, similar to the bank loan marketplace, the syndicated bank loan marketplace that has developed some 30 years ago. All of these are possibilities for banks. But for sure, these blockchain technologies, especially for those citizens of countries in the lower southern hemisphere that haven't had access to banks, these blockchain technologies and stablecoins are going to proffer a new way of interfacing with the financial system that might not include the banks.
Yeah, where do you guys stand? I mean, not as maybe as Franklin Templeton, but maybe you as an analyst in terms of a lot of these bullet points that are coming out of the Clarity Act. You think about the issue with stable coins, which of course has been yield. Then you have the issue of self-custody, which really centers around privacy, much less the idea of what DeFi is going to look like. Would you say pass this bill as it is now or try to go in, negotiate some of those things out?
Well, there's real consequences for this rapid change that's happening. And we saw that, in the Genius Act, small community banks who feel like if stablecoins begin to offer yield, they will no longer have the same sort of business opportunities in their communities that they've had. So this idea that if you look like a security, act like a security, maybe you should be regulated like a security is like a real thing. But there's no doubt that it is a geopolitical strategy by the current administration to deepen and proliferate U.S. dollar stablecoins all over planet Earth in order to continue to anchor U.S. dollar as the currency reserve. So there's going to be a lot of decisions that we're going to make that allow stablecoins to penetrate and retain that U.S. dollar dominance as the currency reserve for the planet. And, some of those are going to have ramifications for, the current financial system itself. There's not a lot of things that keep me up at night, but for sure, the idea that we've created this new promise of money through stablecoins that somebody says, give me $1, I'm going to give you that $1 back, and I'm going to go earn a bunch of return on it. And, for some of the larger stablecoins on planet Earth, there is not the same level of transparency that there is in some of the rules that come through the Genius Act. I've watched the asset management business and I've watched the money fund business be curated over lots of different credit cycles. I'm struck by the fact that we've invented a whole new form of money and promise of money without having to do it any sort of credit cycle in the underlying economy. The weakest links of all economy get exposed when there's bankruptcies and there's credit events. We've created this entire digital asset economy absent of any global credit cycle. And I think we're going to find whatever hiccups that we find in the current construct of the system is going to be exposed when we actually get into a credit cycle, because we've tied money closer together. That word we use in the global financial crisis, contagion, networking. I mean, that's everything about digital assets and cryptocurrencies, about deeper networking, deeper contagion between systems. And so that's the one thing I have my eyes out for. Weak actors in the stablecoin operators, business models that have not yet been processed through the cleansing of a credit cycle across the globe. I think that's going to be something that we're paying attention to.
Interesting.
The period ahead.
Well, I think the point here is the idea of restrictive behavior, around most modern day investors, which have been looking at these assets as a way to kind of fight, if you think about it, the debasement of the dollar. Even though it's a small percentage, it is something that they're not getting elsewhere in terms of how these stablecoin yields have been coming in, much less if you actually go out and put your stable coins to work. If you put it into loans or do something like that, which changes the dynamic of the risk, but it also, is a different narrative, I think, that the banks have not been able to have, really any kind of exposure to. So I'm still on the fence on this in terms of, I'm definitely anti to the point of where the Clarity Act is right now. I still believe that has to be provided and that banks come to the table just like everybody else. We work it through, from a standpoint of equal opportunity. Maybe that is the solution here. I just see the pushback happening, and the concern I have is the demographical shift that's occurring, because we get a chance to see it. I mean, our channels are, going on 3 million subscribers, and the nature of the demographics that are migrating to this content is getting younger and younger, which means there is a massive shift that is undertowing this economy right now that could at any point make a decision to be anti-establishment in essence and say, I'm really going to opt out here and here's the route I'm going to take. And if the banks press too hard, maybe that is something that we actually see happen. Are you guys looking at any kind of data that kind of points to this demographic shift that's occurring right now?
I think one of the, going back to one of your initial questions as we started this conversation, observation is there's far more tools and tool sets. And what I'm talking about, either enabling, individuals to manage their money, to take risks, to manage risks, all of those tool sets that are now available to the kind of individual investors were something that 30 years ago would have been only available to very large institutional investors, right? And so one of the things that I think is so great about DeFi is that, yes, all of a sudden, you have as an individual, you have the opportunity to say, I have assets, if they're held in this blockchain format, if they're held on these rails that you can, attest that I own the asset and it's really mine, and you're willing to lend me against that, well, then that's a contract between kind of the two of us. This idea that you open more credit possibilities and to a wider range than just having, a door on a bank, and you walk in the door and you go talk to a banker and say, hey, I need some money and here's my assets. There's a lot of friction in all that. And you remove a lot of that friction, you increase the possibilities. There's no doubt that there's going to be disappointments when you see some of the trends that are happening where investors are getting access to things like private credit funds, and they decide to loop them 3, 4, 5 times up with a 25% type of yield. Well, I mean, there's no free money in life. That might not turn out to be the best outcome if you decide you're going to take 5 times leverage. But the idea that you can get leverage where previously leverage was only supplied by prime brokers to hedge funds, that creates a whole new array of possibilities. And one of the reasons why I was really enthusiastic about the blockchain technologies even 8 years ago was because I saw the possibilities that there were going to be more and different types of asset types coming into an investor's portfolio.
Right.
And as a result, that efficient frontier might be able to be shifted. Maybe you shift up the efficient frontier rather than just keep having to go out the risk spectrum to increase your return profiles. Or the idea that maybe we don't really live in a 2D world where there's just risk and return, but there's other outcomes that you're trying to drive in your portfolio. You're trying to have impact with your money. Can we measure those things? Maybe there's, maybe there's a plane of outcomes now that we're optimizing across. These highly customizable portfolios are going to be more sticky experiences, because oftentimes we're going to be weaving in assets that have emotional attachment to them alongside of just financial assets. That's going to be a better situation for individuals to assess and build their portfolios for a long time. That's why I'm saying it's so exciting. These possibilities about adding assets, different asset types that provide more diversification and more opportunities for you, are all the things that we see as possibilities unfolding just in the next years.
But you're not worried about this demographic divide that is occurring?
Well, I think that, you're having the capabilities of, the things that I worry about, yes, the loss of trust of institutions in general is a theme that exists across the global economy. This isn't something that's just a something that's impacting investing. The bulk of the assets on planet Earth are held in people like my mother in the United States, not the younger set. So this transfer of assets from, my mother's generation down to my children's generation, and what the outcome and what the financial services that are going to be needed by my children as opposed to my mother, that's a big factor for sure. Can you have more tools? Will we have AI agents? Will Roger Bayston have his Roger Bayston advisor AI agent in the background, checking across all my accounts and making sure that my money is optimized? All of that seems like a distinct possibility in the next years ahead that creates so much better possibilities for investors.
Yeah, I think the efficiencies are going to be clear. The real question is the speed to market. This is, I had a chance to live through the era where, I was a young engineer coming out of college, went to work in Silicon Valley, and I had a chance to see the birth of the internet and the acceleration. But what I did also see was the incumbents that were left behind because of lack of innovation, the problem with trust. This, of course, is amped up dramatically right now. The difference back then was there was no vehicle, so the vehicle was being built and it was being centralized around, a certain narrative, even though there were a handful of companies that were building unique elements around certain things. You can go all the way back to Napster and the birth of the MP3 if you follow what happened back then. And that's kind of where I see crypto right now, is in that, very embryonic stage of growth. The only difference is we are literally on a demographic shift that's occurring globally. We looked at the numbers the other day. United States, over 200 million right now, millennial, Gen Z, and Alpha. So, and 100 million in boomers and Gen X. So we're dealing with a much slower market that, yes, the boomer and the Gen X, investors control most of the wealth right now, but it seems like this shift is here, and we're starting to see maybe the first line in the sand being fought for as it goes. I want to go to another clip before I let you go, and this is CZ, and he's talking about, he's also at Davos, he's talking about some growth potentials in this era, and I want to see where Franklin Templeton stands on this, but let me share this with you.
Right now in the crypto space, there's really two proven industries, the exchanges and stablecoins. Those are large businesses. I'm really excited about three new more. I think tokenization is a huge one. I'm talking with probably a dozen governments about tokenizing some of their assets, because this way the government can actually realize the financial gains first and use that to develop those industries, extractions, the trading markets, etc. Payments is something that we've tried, have not really conquered have not really started in crypto. We tried, but nobody really pays in crypto. But I think now we're seeing the convergence of traditional payment methods being behind the scenes, being supported by crypto. So the spenders swipe a card, crypto gets deducted from their account. The merchants gets US dollars or euros or however, whatever they get. So now when we have those bridges, I think payments is going to come pretty big. The third one is what you guys all mentioned is AI. The native currency for AI agent is going to be crypto. They're not going to use bank cards. They're not going to swipe credit cards. Crypto blockchain is the most native technology interface for AI agents. So when AI goes big, today AI they're not really agents. They don't buy tickets for you. They don't pay for restaurants for you. But when they actually do, those payments will be in crypto.
All right. So, CZ hits on the three big ones. I think everybody knows those. RWA being one of the biggest. Ripple will be a part of this ecosystem. So will Ethereum. We're already seeing, growth in tokenized stocks. I mean, this growth is going to be clear and simple, I think, to track. And we kind of see the trajectory there. Payments, I'm still on the fence on. What would you guys say on payments? Do you think we're there?
Well, it's interesting. All those years ago, when I first started conversing with the SEC to gain permissions for us to launch Benji in the U.S., the observations were, hey, literally as fast as I can record a block on these blockchains, and for some of them, they're fractions of a second, I can transfer this product Benji between two users, whether those are institutional, whether they're individual, whatever the case may be.
Right.
Well, that kind of looks like a payment. You have to wrap around, okay, this money moved and this service or this product moved, but the fine people at the SEC were, bells were going off in their heads, lights were going off, and they were like, oh, you're telling me that you could use your tokenized money fund to pay for things. Yeah. And I'm saying, well, yes, we absolutely can. And especially in the US, the money fund constructs all are wrapped around a constant NAV. So you're not worried about, is the value changing? I think Z's vision about whether we're paying stuff in crypto, does that really work for businesses if they're taking a bunch of currency risk if I walk into my local Safeway grocery store in Northern California and I decide I'm going to pay in yen, they don't want that. They want dollars. They're buying, vegetables from the Central Valley in dollars, not in yen. And so I think there's still some to come on that. Now, there's no doubt when the machines are making these decisions as opposed to the humans, and there's more interactivity, then maybe things are they're less complex than my, limited human brain can be involved in that. But for sure, the speed with which blocks get put onto blockchains opens up the environment for payments. And the payments ecosystems have been, quite frankly, built on, again, a bunch of toll takers. Right. You take a whole bunch of money out of it. So it's absolutely a target market for things like tokenized money funds and or stable coins to be taking more payment market share. Whether people are going to pay for, their cheeseburgers with Bitcoin or not, I think is still an outstanding question. A lot of these actors are going to be accumulating these crypto, but it's still passing it through a US dollar so they can consume, and the economy seems to be the primary form of behavior in the near term. Otherwise, I could take not only just a money fund, but I could take, our entire suite of funds, tokenize them, and I could present that for payments. Maybe the Putnam Growth Fund. Maybe you'd like to pay for your cheeseburger with the Putnam Growth Fund or with the Franklin Income Fund. All of those things do become possibilities, but I'm not sure whether that future state is right in front of us versus some of these other opportunities.
Well, I think you hit on the point. As CZ also hit on that is the agentic element that definitely is going to be here. We've already started to experiment with agentic management on some of our own assets, finding it very efficient. Obviously, we're edge case, very, we love to test things and break stuff, but also try to see how this is going to work. And what we're seeing right now is very early stage, but it's happening. And if you look at this in 18 months, which I think just at the, if you think of Moore's Law and what that's going to look like in terms of advancement around, especially at the AI race that we're dealing with right now, I don't know. I think we're here much faster. Just look at the growth of stablecoins, and there's still no real clear regulation. And the growth has already been just astronomical in terms of use cases. So I'm very bullish for sure. What would you say, parting here, what would you say is the number one focus for Franklin Templeton when it comes to new products coming out? You could categorize, where do you see the focus?
Yeah, our work on specifically about benching and tokenized money funds isn't about the end game in money funds. It's the idea that if this solution set holds for something that's, has a high velocity activity because money funds have already been in the payment ecosystem for a long period of time, then we can apply it across the rest of the products and services, the 1.7 trillion that we have. Yeah. And so, the narrative around Franklin Templeton is what is next? What can we deliver next? And the bottom line is across all those, hundreds of thousands of products and services that we have, we're working really aggressively with what I would call the have wallet ecosystem, because we see the world divided into two places. Have Web 3.0 wallets, and, CZ and Binance are a prime example of 300 plus million digital wallets inside of their ecosystem. And then the other part of the world is want wallet ecosystem. We don't see anything besides those. We see the want wallet ecosystem, learning, investing, heading toward getting wallets. But this have wallet ecosystem, what are the products and services that they want? We have found at Franklin Templeton, it's most important to listen to what the customers want. Sure. Those customers in those have wallet ecosystems don't necessarily want the same things that the customers in the want wallet ecosystems currently consume. Yeah. So having ears to ground as to what they want, and then what the global securities regulators are permitting for the distribution and the proliferation of all this. We're just super glad to be on the front side of this and be able to be engaged in conversations with organizations like Binance to help them solve problems for their customers and clients.
I will say this, is that for all of the finance guys that we talk to, one thing that I feel like a lot of people are not spending a lot of time on is, and I keep going back to this, is this trend for younger investors and the DeFi, whether it's DeFi and or stablecoins, that kind of become the new product and service heading into that market. I hope that we see some aggressive build out in that area that would entice those young investors to stay in this ecosystem, because I fear with the pushback that we're seeing just on this Clarity Act, much less if we start seeing things happening due to the Clarity Act or the Genius Act, these people are, they're on the edge.
Well, they are. The Have wallet ecosystem are already providing these services. The Want wallet ecosystem that currently exists is migrating in step form there.
Yes.
But you can imagine the risk capacity, the risk tolerance of the users that are already inside of the Have wallet ecosystem is far different than the ones who might
agree with that.
Advisor and that's. And so, ears to ground, listening to what they want, give them solutions that that meet their needs. That's everything that we're doing at Franklin Templeton.
I love it. All right. Hey, it's been great having you on today. Of course, we love having Franklin Templeton on the show. We'll definitely get you guys back in as things mature through the developments that are happening. Thanks for coming in today, Roger.
Thanks, Paul.
You bet.